This year will bring a rise in home prices and a bump up in home sales. That's what Fitch Ratings is calling for. Joining us from Fitch is Robert Curran. Good to see you again, Bob.
Very good to see you.
Now, you put out a report that looks ahead to 2013. So before we get there, was last year the turning point, and are we going to be on an upswing now, or are there risks?
I do think last year was a turning point. And in fact, in the few years prior to that, we were sort of bumping on bottom, as it were. Last year, it was clearly an up year for the major housing macros. A lot of things came together very positively, and we've moved off of a very low low.
So in terms of risks to the recovery, are there this year?
I don't think there are major risks to the recovery. There are issues that could moderate the level of further recovery that we're experiencing in 2013. But short of a meaningful economic recession, I think we're still intact.
And certainly the Fed continues to buy mortgage-backed securities, so interest rates will remain low. The conditions should be good for home buyers.
Well, certainly that perspective, conditions will be good. Yes, we expect that rates will be low. They could bump up a little bit, and in fact that might even be positive because that could get some fence sitters off and actually commit to making a purchase they've been thinking about for a period of time.
Now, your report had this fact that housing remains more undervalued versus incomes than at any time in the past 35 years. Tell me a little bit more about what that means and how it plays out in 2013.
Well, the issue here again is relative comparisons between own and rental and the affordability issue. When you put the various factors together, again, that ratio that you just mentioned, as well as the low interest rates and the fact that home prices have come down quite meaningfully from the peak, all of that combined create conditions that were evident last year will still be evident this year that are conducive to encouraging people to make that step ahead and purchase a home, whether it's their first home or a trade-up home.
And we are seeing in terms of sales, at least in one component, new home sales, you expect double-digit increases.
That is correct. In many ways, the new construction part of the market is in position to show particularly good improvement. The existing home part of the market, much larger in size, still affected by things like mortgages being underwater and by a number of other issues, isn't likely to be quite as robust. It'll be led by new home construction.
Now, you have a stable outlook for home builders this year, stable ratings. What would make you change your outlook? What would you want to see?
Well, of course, this is credit ratings, and we're taking into account the financial strengths of the individual companies involved in the sector as a whole. What would do it probably an even more robust period ahead than what we're currently forecasting, and restraint on the part of the builders in terms of just how much they're committing to new land purchases.
And you actually have a positive outlook on two of the home builders, D.R. Horton and Standard Pacific. Now, why do you have a higher view on them? Is that sort of their own financial internals? Are they in a regionally better spot than some other home builders?
A big part of it has to do with their, as you say, their internals, their particular operating model, their particular financial dynamics put them in a position to warrant close consideration potentially for an upgrade from the current ratings.
And let me just ask you, one big risk on the horizon that everyone is talking about now is what happens next out of Washington in terms of raising the debt ceiling and budgetary concerns. Can you sort of broaden that out for the potential, what it means to the economy and potentially the home buyer, if anything at all?
Well, I'm not an economist, but it seems to me that if we do not come to some reasonable agreement in terms of the debt ceiling, and then secondarily in terms of the automatic spending cuts that have been talked about, which would be enormous, that point I made earlier about an economic recession being a troubling factor for housing, I think either one of those issues could propel us into that kind of a situation. That wouldn't be good for housing, obviously in general, wouldn't be good for the economy.
Fitch's Bob Curran, good to see you again. Thanks
so much.
See you. I'm Rhonda Schaffler. This is Reuters.